Hello, everyone. Welcome to Thursday's live trading session where we're going to take a look at the market, see what's been going on so we have some context, and then we're going to dive in and take a look at some trades, hopefully trades that you provide. So I'd love for you to go ahead and input your tickers, the stocks that you want to look at. Just go ahead and put that in the comment box there. Should be available for you both on Facebook and YouTube. And then we're going to go ahead and look at those potential tickers together. We've only got about 15-20 minutes for this here, so go ahead and get those in quickly so we can be sure to get to those. I should go ahead and mention that all these examples we're going to be looking at in this live trading session should be viewed for educational purposes only and not taken as trading or investment advice. So let's go ahead and jump right in here. I'm going to share my screen. There we go. Here we have the S&P 500. So the overall market we're looking at, you can see how we had that nice bullish rally the last couple months within the bear market. So that makes it a bit interesting because we've got some bullish trades that we can do in a downtrending market, a little bit of counter trend trading going on there, but beautiful kiss off the 200 simple moving average, started to move down and then really came down. I personally kind of was hoping for another move up so we can make an M. That could still happen. It'd be a really big M. We'll see. But it definitely dropped off there. So if we continue to move down from there, it's going to continue to confirm that bear market, the recession, and everything. So it makes it kind of challenging to find trades in there. But I've got some tickers that we're going to look at while we wait for some of you to put in some tickers to look at as well. So we're just going to start off looking at General Motors. Let's take a look at General Motors first. General Motors actually was making a really nice uptrend and so far has not broken that uptrend here. I mean, just the line a little bit. You can see started making higher highs, higher lows nicely along this line. There's 1, 2, didn't quite get there. They used the 10 EMA as support there, but the third touch right there yesterday really was a nice day. You might be wondering also, what is this box down here? Well, that is an example trade that was given in one of our other live trading sessions. A student asked about this potential trade, and I like to just kind of draw the boxes because I'm a visual learner. So in this case, it was a bull put spread, and if the student did take that trade, they'd be in good shape right now. This trade's really working out for them so far. General Motors, you can see, even with the market pulling back the way it did, they didn't pull back a ton. Yesterday was actually pretty nice buy point, all things considered. Today, up a little bit again. You could still take that trade. Your buy point's not quite as good. But here's the thing, too, right? You got to look at where the overall market is. And, if the overall market does turn around and keep coming on down, how long can General Motors stay, in this bullish uptrend here? So that's something to keep in mind as well. All right, that's the first one we're looking at. Guys, again, feel free to throw in any tickers or stocks you want to look at, and we'll jump to those instead. Next one I've got on my list here, Occidental Petroleum. Okay, now this is one of those oil stocks, right? And then the interesting thing, if you remember about Occidental, is that Warren Buffett actually piled into this one with billions and billions and billions of dollars. He did that back, let me go back a little bit. That was in here. So all this volume right here that just shot up, that was Warren Buffett's doing, and the price shot up as well. Recently, the energy stocks really came crashing down quite a bit. You can see a little bit of that here, although Oxy did not do nearly as bad as some of the other stocks did. Recently, Oxy's been moving up again. So, well, let's take a look at this. What can we do with this? It's really been punching up here. The problem is that it's not at a very good buy point. This would be one that we'd be kind of chasing. Of course, it would have been nice if we had bought it. Let me zoom in a little more. Let's just grab this cross section here. It'd be really nice if we'd bought it on this day, right? Right before the big move up. But even there, where were we? closer to resistance than we were support. So we couldn't have known this move up was going to happen. So that makes it a bit challenging. But there is still potential with Oxy. What would I want to see? I would love to see this thing pull back a few days. If it can pull back a few days and put in a bounce off the 10 EMA, that potentially could be a good move. Let me draw a line here real quick. Even if it moves up or pulls back and then bounces off the 5 EMA, that's a little more of an aggressive entry, but that is still something that could be considered. If it came all the way back to this potential uptrending line, and I say potential because I only have 2 points here, so it's a line, but it's not a confirmed trend yet. That would be a pullback to the 20 EMA. So we'll have to see what happens there. But Oxy, one to watch. I wouldn't move on it quite yet. All right, let's take a look at Costco. Here's one that I found kind of interesting. Again, you can see a box here. In this case, the student was looking at a potential bull call debit spread. And this one did not work out. I'm not sure if the student took this trade or not, but this one would have turned into an expense because it just did not move through those strikes as the student was maybe hoping that it would. It's unfortunate because in this case, if the student had just given double the time, maybe extended it out another week, it would have eventually followed through. So the student was right about where it was going. It's just wrong on the timing. So interesting one there. But you can see Costco, it was pretty hot here using the 20 EMA right there as support. Kind of leveled off a little bit, still making higher highs, higher lows, still using the 20 EMA. So Costco is one that potentially could be at a decent buy point. Now, I wouldn't want to buy on that candle right now. Maybe later in the day, if it shows that it wants to move up again. I'm just not a big fan of getting bullish on a solid candlestick. If you're really aggressive and you want to look at that wick as, well, that's a bounce off the 20. Okay, you could do that. Another thing to consider could be, well, could I get in with a credit spread? I'll draw another box for us here. Could I potentially find a credit spread, something like this, to be useful? We'll do, say, a $5 wide. I'm just picking out some time there. I think that's pretty close to the September expiration right there. So if you did a 520 by 515 credit spread, is there any money in that? Go on, not quite a month out, but about 3 weeks out or so. So that could be something to consider, and I might consider that instead of a debit spread or a straight call, because you do see this pattern kind of cooling off. Now, keep in mind, for me, especially with where the overall market is right now, my line in the sand would probably be the 20 EMA. If Costco came crashing through the 20 EMA, I would want to be out of that trade because the premise of the trade is broken, right? I am expecting it to stay above the 20. If it stays above the 20, I'm happy. But if it breaches that 20 EMA, that white line here, at that point, I'm concerned that it could be coming down, testing the 50 or even more, and that would really put my trade, it would put some pressure on my trade. So that would kind of be my line in the sand. So if you had a very defined stop out point, if you will, an idea like that still could be considered. All right, guys, I got a couple more that I can go through. If you guys don't throw any tickers in there, but if you do want maybe a trade that you're considering to be looked at, go ahead and throw that in the comment box because I'd love to answer those for you. Let's take a look at Boeing here. Boeing is one that has been kind of an interesting one. They've been getting, for a lot of this last year, been getting hammered, just down, and down substantially at the first part of this year, and started to uptrend again. Some life in Boeing, so that's good. Let me adjust my line here slightly. There we go, and you can see potentially this is a a decent uptrending support line. You got one, there's several touches in there, and then another touch right in there. So it's moved up now a little bit from that line. So that's something to consider as well. I'm going to pull this line back. The price didn't seem to want to care about that line in this area right here. I would probably put a line here. Look at that. That's actually going to be a good line. You can see that gap line right there. This other line was from where it jumped on the gap and then it landed on the gap. So in that, it was resistance there, then it gapped above there and was hanging out above there. You can see it gapped again. Stocks sometimes kind of like to do that. They don't just go through lines. They might gap through it or something like that. So it is above there, so that's good. So what I like about this chart, we have an uptrending support line, and it came and touched that, and it moved up from there. We're above this line again, so you kind of have a second form of support, if you will, and it's moving up today. So again, this is maybe not the best buy point. If you are one that you are really wanting to get the best buy point, I would wait on this one. I would wait. It might move up some more, and then it could come down and put in another bounce off that uptrending support line. But if you're like, you know what, we have tools to where we can take the trade even when the buy point isn't ideal, i.e. a credit spread, right? Let's draw another box in here. If we did a credit spread, maybe let's call it the 155 by 150. And again, we'll go somewhere mid-September, about 3 weeks out or so. That idea could potentially work. Then your question is, where's kind of your line in the sand? For me, it would be, again, I'm gonna keep it pretty tight, right? My line in the sand is gonna be pretty tight just because I know where the overall market is. And if the overall market rolls over, I think Boeing might as well. I mean, in fact, it did, right? It was up here at one point, almost about $174 a share, and then came down to 158 or so. So it did move down a bit when the market turned around just in the last week. So I think Boeing could do that again if the overall market comes down again. So where's my line in the sand on this guy? I'd be looking at this uptrending support line. If we come break that line, and I find myself maybe at, below 160 or something like that, that's when I'd be pulling the trigger on getting out and protecting my capital. All right, I see we've got a quiet bunch today. That is okay. No worries. You guys have been fantastic the weeks before and throwing in tons of tickers. There are times I was literally just rapid fire going to get through them all. But that's okay. We'll finish out our list here. Last one I've got on the list is Microsoft. Okay, and Microsoft's kind of an interesting one. You can see how this one really came down quite a bit with the last turnaround of the market. It hit the 200 simple moving average beautifully, just like the market did, and then came down from there. Dropped down right now, it's right around the 50 EMA, and we're kind of wondering, is it going to hold there as support and start to move up again? Maybe it starts rolling, or is it going to fall through there? Now it's kind of interesting. This line I can pull further across, and that's really drop down just a hair. That's really close right there. If this is support, that used to be resistance right there, used to be support back in there as well. And again, we got these boxes. I love having these boxes up here because we get to look back and see, would this have worked or would that have not worked? Now, I remember this particular one, a student was asking about this credit spread right here. And I was like, oof, the overall market, it just hit the 200. It's starting to come down a little bit. And we were looking at it on this doji day, right? On that doji day, we were looking at that credit spread. And I remember thinking, this is not my favorite setup, right? This is not my favorite setup. What could be done? What could be done though? And I recommended maybe you look, if you really like this trade, maybe you look at a very small debit spread. Now, I don't know what the student ended up doing, but if they did take a debit spread instead of the credit spread, yeah, it still was an expense, right? Neither trade in this case worked. Neither trade worked, but the debit spread, since we put so much less money into those, would have been a much smaller overall expense than what this credit spread would have ended up being. The difference could be maybe the student lost $100 on the debit spread versus the credit spread. Potentially the student lost $300 or $400, per contract. That is, if they're loading up on 10 contracts, then, you do the math on that one. So pretty big difference there. If they did do their credit spread, hopefully they got out that first day, because the next day is just ugly. At that point, you're really playing with a maximum expense. And it was only 1 week. So, this thing would expire tomorrow. The chances of this thing coming back through those strikes by the end of tomorrow, very slim, very slim. What can you do with this today, though? We're coming into an area of potential support. We don't have a bounce yet, though, right? If this candle right here was a clear candle, green edges, moving up, at that point, you might be able to go, okay, that's an aggressive entry, but it is bouncing up. But it's not, it's solid. So honestly, I would want to wait. But what trade, if we do start moving up, what trades could be considered? And credit spread, not my favorite one on this one, because of the potential of this thing just turning right around with the overall market and then coming down here to the 250, 260 range. You put a credit spread down here at 270 on this one, and you could be in trouble pretty quickly. I would, again, if you have to take this trade, and of course you don't have to take the trade, right? But if you wanted to, I would maybe lean into a trade that's going to require less capital. So a debit spread, again, maybe you do if you do get a move up, you could do a 280 by 280, 250, even just a $2.50 wide debit spread, something like that. And you might be able to get a move your way, just long enough to get that profit there. So anyway, let's take one last quick look at the overall market. I doubt much has changed since we left off. Yeah, you can see today it had gone up to the 10, but started to pull back. So even that candle, yeah, it's up a little bit from yesterday, but not in a convincing manner. Not in a way that I'm like, oh yeah, here we go, we're turning around. No, we this thing could be read by them today, and by tomorrow, it's very possible that we could be coming right through the 50 on our way down. So we'll have to see. All right, guys. Well, thanks for being on. I know even though we didn't have many comments, you guys were still there. I see you there. So thank you guys for being on. We're going to see you next week for Live Trading Thursday. Bring those tickers. Love to help you out. We'll see you.